Jim, there's been a lot of talk, Jim Cramer, long-term investor, short-term investor, how the picks are doing, whatever. Let's forget that for a second, and let's forget that you're focused on the long term. Okay. And let's just pretend for a second you're 22 years old, you're starting out your career, all you want to do is day trade. You don't want to hold overnight, and you have $50K, say, to trade.
What people don't understand is that when I was at my hedge fund, it was all pre-Reg FD. So there really was a way to get an edge. Earlier I did a video with Michael Camo, and he was talking about whether to buy GameStop ahead of the quarter. There was a time when you could have actually gamed GameStop. You speak with the CFO, you get a sense. And you would know that maybe they're going to do 10 cents instead of 8 cents.
How would you get a sense? Like, is it a psychic thing?
If you called, the old days, if you called the CFO every Friday, they were allowed to give you insight until the last month, and then that was the quiet period. So I just developed and I mentioned this in Confessions of a Street Addict. Let's say I'm doing Maytag Whirlpool. So I would call Maytag, ask them how they're doing, and then I would give it to Whirlpool, and I call Whirlpool and ask them how they're doing, and I give it to Maytag. Okay. And so I had this kind of great network of CFOs. That's all obliterated, okay? So it's really hard to be a day trader now because you're based on, I don't know what you would even base your picks on. I think that you could do yesterday Lowe's does a conference call, and in it they say Valspar is doing really well. So maybe you take some Valspar, and then you bet that some Valspar analyst was on the call and they say something. But I think it's very hard to figure out what to day trade.
Well, that's interesting. So let's say you're up at 4 in the morning and you're convinced that by the end of the day you're going to make a profit, no matter which direction the market goes.
Like the old days?
Yeah, like the old days. And you're really determined. Forget everything you just said about how it's really hard. What would you do? How would you do it?
Well, the first thing I would do, if I'm up at 4s, I would try to game like a Toyota motor, where that's going to open based on the dollar-yen, because if I could get a price in Japan that's different from America, maybe I would do that. I mean,
that's everybody gaming that. It's like SAC gaming.
There's a lot of guys gaming that. Yeah, I know. That's the old days for me when I was like the only guy who was up. I would look at. I got to tell you, a lot of the big advantages are so gone that I would be inclined. You need to get a bid. You need to get a big brokerage house to help you. But if I got up at 4 in the morning, what I would do now is try to find something in the out-of-the-way newspapers through Google searches that would help me. But I would encourage people to recognize that I think it's a sucker's game now. It's just very hard. It's a sucker's game.
Well, it's very interesting. I'll tell you a little-known statistic. But if you only own the S&P 500 from the close to the open, so do the reverse of day trading, never own it during the day. Only own the S&P 500 at night. From 1992 through now, really, the huge bull market. The S&P 500 is up, multiples of 100%. All of your gains and then some are overnight. You actually lose money.
That's incredible.
Yeah, you actually lose money if you only hold from open to close. So if you're trying to be safe and sleep soundly,
you can't do it.
You'll lose all your money.
Wow.
So not all your money, but you'll be down. You'll be negative.
Okay, well, let me give you, apropos of that. If that's the case, what you want to do is try to game overnight, but have limited amount of risk. So what you would do is you develop an option strategy that would take advantage of the fact that it's overnight. So last week, it's options expiration week, and you figure out that one night it's going to open differently from another. So you have to capture the upside of when it opens up. It would seem like that would be what you would do, is if you're not going to make any money during the day side, then that means that if you conceivably, it's conceivable that you want to be able to game the intradays.
And I wonder if on an OED week, if it's and this is something worth modeling, if volatility spikes higher in an OED week, maybe implying like put covering or whatever, maybe that's the time to go. It's like 9/21/01. The same type of thing happens.
But the one thing I want to emphasize, and I know that you feel this way, don't sell puts as a way to be able to play this, because you could be right, and then you'll be wrong and you'll lose everything.
Well, all right. So we didn't quite analyze the day trading, but we got your. Because
I am point blank saying that I don't know what edge I could have. Yeah. If I were back in that business, I think I'd try to develop an edge. I can't think of one right now.
Interesting.
Yeah.
All right. Well, thanks very much.
Yeah.